Hey everyone, I hope you're all doing amazing today. In today's video, I'm going to go over and cover 4 of the best Canadian dividend stocks to buy and hold forever. These are stocks you're literally going to want to hold for the rest of your life. These companies are all well established and cross several different diverse sectors, making them the perfect backbone to any long-term investment portfolio. They all have great track records for increasing dividend payouts year after year, making them perfect for any dividend growth investor looking for passive income for decades into the future. I'll walk through each one of the stocks, go over their financials and their dividend growth rate in the past, so that you'll know exactly why they are a great add to any investment portfolio. So I hope you guys enjoy. The first dividend stock that I would recommend buying and holding forever is one of Canada's big banks. Although all of the big banks in Canada are great dividend investments long term, this one takes the crown for me. It's TD Bank. TD Bank offers a dividend of around 4.2% and has a great track record of increasing that dividend year over year. Over the last 5 years, TD has averaged an annual dividend increase of 9.8%. Not to mention that TD has been offering a dividend for 164 years straight. The chart on the left shows that amazing dividend growth year over year for the past 20 years. This dividend growth is only going to continue into the future, making TD Bank an amazing hold for years to come. The reason I like TD Bank over the other Canadian banks is because of the chart on the right. It shows the revenue breakdown of TD Bank. You can see that 55% comes from Canadian retail, but 31% comes from US retail. TD Bank is rapidly expanding into the United States and is really getting a foothold as being one of the US's major banks. TD actually currently ranks as the 8th largest US bank by holding size. With the rate it is currently growing at, I wouldn't be surprised to see TD hop a couple of spots on this list in the coming years. TD is currently trading around the $75.68 mark per share. It has recovered extremely well over the past few months from the pandemic, almost at pre-pandemic highs. For this reason, I would probably wait for a slight dip in order to get in. I'd probably try to get in under $75 per share. Taking a look at TD's income statement, we can see that the total revenue has been increasing nicely year over year, along with the net income. Even with everything going on in 2020, TD was still able to increase their earnings from the previous year. TD has truly stood the test of time with its dividend payout, not to mention in the recent years its amazing track record for dividend growth year over year, coupled with its consistent growth in the US banking market. This is why I think TD is one to buy and hold forever for passive income and dividends for years to come. The second stock on the list to buy and hold forever is in the telecommunications sector. It's TELUS. TELUS offers just over a 4.6% dividend and a 5-year dividend growth rate of just over 7.1%. TELUS actually has its own dividend growth program where it aims its intentions are to semi-annually increase its dividends for an annual increase in the range of 7 to 10% all the way through to the end of 2022. This program began in 2011. So TELUS has been increasing its dividend annually in the 7 to 10% range for 10 years now. With this track record, we can assume that TELUS will continue to grow its dividend at this rate for years to come in the future. Canada only has 3 major players when it comes to the telecom market, that being TELUS, Bell, and Rogers, each making up about 30% of the market. This diagram is a little outdated. TELUS now has about 30%. TELUS has been slowly eating away at the market share of Bell and Rogers. I think this will continue to happen because TELUS has been leading the way when it comes to getting their network ready for 5G. As more and more devices become 5G compatible and eventually convert over to 5G, I think this will only help to grow TELUS's market share. Another amazing reason I like TELUS for the long term is it has a stream of its business called TELUS Health, where it does telehealth. I think because of recent events over the past year, this is an industry that is just beginning to boom. TELUS Health's main attraction is its app called Babylon that already has millions of downloads and can be found on any of the major app stores. TELUS's stock is currently at $26.51 a share, and if we look at its max chart, we can see that over the last 25 years, it's seen very consistent growth. So not only are you getting a great dividend for passive income, but you're also getting a stock that sees consistent growth year after year in share price. Looking at TELUS's financials, we can see that revenues have been consistently growing year over year. However, in 2020, the earnings, net income, did take a hit due to the pandemic, as did most companies. I think TELUS will bounce back in 2021, and the work that it's been putting into 5G networks, along with its TELUS Health app, I believe will help to see it grow in 2021 and beyond. The third and fourth stock to buy and hold forever are both in the utilities sector. The third stock is Fortis. Fortis offers a dividend of around 3.9%, and its 5-year annual dividend growth rate is just over 7.4%. Fortis is a stock perfect for any long-term investment portfolio. They've stood the test of time, and they let their past performance speak for itself. If you just go look at their website, you'll see this. They show 10 years of superior growth returns and have 47 years of consecutive dividend increases. This speaks wonders about Fortis, and they have one of the longest consecutive streaks for dividend increases in the entire country. Fortis as an energy company is extremely diverse, having operations that range all over Canada and the US, and even as far as the Caribbean. Since they are an energy company, they are extremely regulated and have long-term energy contracts. This makes them an extremely low-risk investment, as their cash flow is regulated for years to come because of their contracts. Fortis currently trades at $51.54 a share, down 6 to 8% from its October prices. I think this is a great time to buy, in my opinion. Fortis truly is the best investment for any long-term dividend investor. Its streak for dividend increase is almost unparalleled. It's a company that will pay you dividends and increase its dividend year after year for decades to come. The fourth stock on the list, and also in the utilities sector, is ALGONQUIN Power and Utilities. ALGONQUIN Power and Utilities offers around a 3.5% dividend, alongside a 5-year annual dividend growth rate of just over 12%. ALGONQUIN Power and Utilities is a great stock to buy and hold for passive income forever, because just like the other stocks, it's seen great dividend increase year over year over year. ALGONQUIN Power and Utilities can have its main business broken down into two components. The first is similar to Fortis in that it's regulated utilities, so your electricity, your water, your natural gas. And the second part is the one that really excites me long term. It's non-regulated renewables, but it's clean energy and renewable energy. The regulated utilities makes up 65% of ALGONQUIN Power and Utilities business, while the renewable and clean energy makes up the other 35%. I love this split because you've got the majority in the regulated utilities, so you've got that constant cash flow for the business, but you've also got a decent sized exposure to the renewable space, which I think is the future long term, making this a great hold for long-term passive income and growth. ALGONQUIN Power and Utilities is currently trading at $22.15 a share, and if you look at its 5-year chart, it's seen crazy amounts of growth consistently over the past 5 years. ALGONQUIN Power is extremely diverse, and I think it will be able to continue this growth for decades to come. Looking at their financials, we can see that ALGONQUIN has been increasing its bottom line, leading to increased earnings, along with pretty consistent revenue growth. I'm super excited about ALGONQUIN long term. I love that it has both the regulated utilities and the renewable space, giving you that exposure to the renewable space. So there you have it. 4 amazing Canadian dividend stocks to buy and hold forever for passive income for decades to come. To recap quickly, the 4 stocks were TD, TELUS, Fortis, and ALGONQUIN Power. I think all of these will be great long term and will be great for any long-term dividend portfolio. So I hope you enjoyed the video. If you did, please smash that like button and subscribe to the channel to stay up to date with my latest content. I'll see ya in the next one. Thanks.